NSE was marginally up again yesterday, but are we really just seeing investors taking their year-end positions, and will we perhaps see the market firming out for the rest of the year?
Well, I think for the rest of the year, we'll probably see the market inch slightly up. And I think that's actually for technical reasons. As we get closer to the end of the year, people try to balance their books. And we think that this is going to play a significant role in the way trading evolves before the end of the year, especially with an imminent mark-to-market for non-bank players. We expect that there will be some level of adjustment in prices, and this could be positive for the market. However, the direction of the market is also largely dependent on the level of liquidity that is in the system. If you see the sort of volumes and value numbers that we had yesterday, extremely low relative to market averages that we've had in the last 3 months.
Well, one of the non-bank stocks that performed quite substantially yesterday was Dangote flour mills. What was driving that stock up?
Look, I mean, seriously, what has happened in the market is there is a flight to safety in the Nigerian market, and I think that has been the case in the last 12 months. Stocks like Dangote, Nigerian breweries, flour mills continue to provide investors with some level of stability from a return point of view. And I think that's the reason why those stocks are leading the charge towards the end of the year. With the increased uncertainty around the banking and possibly insurance stocks, the only safe havens really would be in your breweries, probably your conglomerates, and a number of food and beverage players. So in essence, what we're saying is that going forward, the market is going to tilt more towards value investing, and the focus will be on the real sector of the economy.
Well, when talking about confidence in Nigeria, a lot of investors perhaps concerned about President Yar'Adua's health. Is that a concern for you right now?
Well, it is a concern, but I think it's something that we should downplay. One of the things that we have some level of comfort in is the strength of the Nigerian constitution, in spite of whatever weaknesses that we've all attributed to it. In the unlikely event that there's any constitutional movements, we believe that the market will recover very quickly. Don't forget that the market has priced in quite a lot of bad news already, even from the economic front. I believe strongly that the president is going to recover from whatever health challenges he's having right now. But the market itself will focus more on the direction for economic policy, focus more on the direction, the outcome of things like deregulation of the downstream sector, the outcome of the year-end maneuverings around the banks. I think those things actually are more ominous for the banking or for the stock market or for investor confidence than the health of the president.
The news out yesterday was, of course, the NSE saying that it's offering to list oil majors for free. Do you expect to see a wave of listing coming up as a result of that news?
I actually don't share any of those views. I think the oil majors will be looking for a bit more depth in the market before coming to list the stocks on the exchange. Something that you also want to be careful about is there's been quite a lot of negative perception around the stock market in the last 6 months, and all the allegations of price manipulations and what have you. And I think those would weigh negatively on the market for a long time. So whilst there's a possibility that some of the oil majors would consider listing on the stock exchange, I'm not sure we're going to see a big wave.